Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, we're going to be talking about how we are using good debt in order to build a six-figure portfolio in the stock market. We'll be talking about using the Smith maneuver technique and how we've used it so far to build a stock market portfolio here. We'll be sharing with you specifically what holdings we have in our account and how far we've gone through that. You may have heard in the news that today the Bank of Canada actually increased their interest rate by a quarter of a point, and that definitely plays a part in the borrowing interest rates. For example, for us as part of our Smith maneuver, we are borrowing money, tapping into the equity of our homes to use that money then to invest. And it is based on a HELOC, home equity line of credit, which is tied to a variable rate. And as a result, as the interest rates go up, so does our interest rate that we have to pay when we borrow money. Luckily for our account, majority of our home equity line of credit was based on a much smaller and much favorable interest rates. Previously, it was only at 1.55%, and with the increase of that a quarter of a point, it is now up to 1.8% borrowing. That's probably, I would say, around 80% of our accounts balance is borrowed at that amount, and the remaining one is at much higher interest rate, which after the increase, it's hovering closer to that 3.7% rate. Nonetheless, we still think longer term, this is going to be a really smart strategic decision, tapping into the power of a Smith maneuver. And for those of you who might not be familiar, a Smith maneuver is a technique used here in Canada where it allows homeowners to borrow the equity on their principal residence and use that money to invest. For example, investing in the stock market, investing in real estate, or other investment avenues where it creates a sort of a income for them. For us, we are using that money and investing in the stock market. And not only that, we are using different accelerators that are offered through the Smith maneuver technique to expedite our growth. As you notice here on the screen, one of those accelerators is what we call cash flow diversion. And what cash flow diversion is, let's say if every month or every week, you set aside some money and invest them in some taxable accounts, like a non-registered account. Instead of doing that, you could try to divert that cash flow first through your home equity line of credit. You pay down your mortgage, then reborrow that exact amount to then use it for investments. At the end of the day, you're still making that investment, but the difference is because you're redirecting it first and going through the right channel to pay down your mortgage and then borrow, that amount is automatically then becomes tax deductible, which is why the whole thought process behind Smith maneuver is trying to convert your existing mortgage from a non-tax deductible fund into a tax deductible one. And this is one way to expedite that and speed that process up. With that out of the way, let's take a look at our account that we have with Smith maneuver on Questrade. Current balance is sitting at $77,453. We are definitely growing, and over time has grown. When this account was opened early December, it was hovering closer to that 69,000, and since then we've managed to grow it. We've been buying into one ETF that we've talked about in details here on this channel of why we are buying into VEQT or Vanguard All Equity stock kind of ETF index fund. Be sure to check that video out if you're interested to know more about VEQT and our review around that. But since our last update, we've grown our existing holdings, and now currently we have 2,205 shares. Most recently, we added $2,000 into this account, and we've been gradually buying it. But let's take a look at the return for VEQT in the past several time frames. Today's return was positive, close to 1% return. The past 5 days, VEQT is showing a growth of 4.16%. In the past 1 month, VEQT is down by 2.41%. In the past 3 months, it is down by 4.71%. The past 6 months, it is down by close to 4.97%, close to 5%. And in the past 1 year, it is up by 6.9%. as we see these decline compared to where it was at one point, we are trying to add more to our existing shares and take a full advantage of dollar cost averaging. For example, today, I believe we bought closer to 10 to 15 different shares. I can show you in a moment a number of those ones. For example, we bought one share at $34.78. We bought one at $34.79, and even further, as indicated, close to $34.56. Different price ranges that we've bought recently in the stock market today. And I'm going to show them here, different price ranges. But as I indicated, we currently have 2,205 shares of VEQT. We are down by 4.46%, or negative $3,588. Today, the balance was positive. We had a positive profit of $727.64. This is how much the value of our account improved because of the 1%, roughly 1% increase in the value of EQT. The total market value for our holdings is at $76,711, and the book value for them is close to $80,300. So that's how much investments and funds we've put into this account. We still have around 700 or so in terms of cash that we can use to buy more shares of EQT, and we're trying to kind of do it slowly and over time see how the market reacts. So most likely tomorrow we'll gradually add some more shares of EQT and some more on Friday as well. This is the main holding. For those of you who may not be familiar, VEQT does pay a dividend, but it's paid on an annual basis. The last time they paid their dividend was in January, and it was about 51 cents per share, or roughly a dividend yield of 1.48%. That's where it kind of lands in terms of the dividend yield. Are you currently investing in the stock market through borrowing money, whether it's into a margin account or perhaps using a Smith maneuver technique? I would love to hear from you to know how you're capitalizing on good debt to build a large portfolio and invest for your future to reach financial independence. So be sure to leave us a comment down below and let us know. I hope you enjoyed this video and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel for more videos about investing and ways to reach financial freedom. In case you have any question about Smith maneuver, about investing in the stock market, or any other topics like that, leave us a comment down below and ask your question. We will be sure to cover it in our future video. Thank you, and I hope to see you next time.